Welcome to our video, where locals own homes young, 10 surprising countries. We're diving into the fascinating world of homeownership across the globe, highlighting 10 countries where young individuals are successfully getting into the real estate market. From government subsidies to family support systems, we'll explore the unique factors that enable youth in these nations to achieve homeownership earlier than in others. Join us as we uncover the surprising trends and policies that are shaping the landscape of young homeowners around the world. 1. Poland. Early homeownership driven by family support and policy shifts. In 2024, Poland stands out for its remarkably young homeowners. According to Eurostat's latest data, nearly 45% of Poles under age 35 already own their own homes, a figure significantly higher than the European average. Much of this trend is fueled by strong intergenerational support. Parents often help children with down payments or even transfer property directly. The Polish government's Safe Credit 2% program, launched in 2023, has further boosted youth homeownership, offering subsidized interest rates for first-time buyers under 35. Local banks are also increasingly offering favorable mortgage terms, with fixed rates below 5%, making monthly payments manageable for young earners. In cities like Krakow and Wrocław, co-ownership models and relaxed lending rules have taken off, allowing groups of friends or siblings to buy properties together. Remarkably, over 70% of home purchases by buyers under 30 are outside major metropolitan areas, where prices remain far lower than in Western Europe. With government plans to expand affordable housing by 2025, Poland's lead in young homeownership looks set to grow even further. 2. Singapore. Subsidized housing and stringent policy shape early ownership. Singapore's approach to homeownership is unique and highly structured, resulting in more than 80% of residents under age 35 living in homes they own, primarily through public housing. The Housing and Development Board, HDB, offers heavily subsidized flats to citizens as young as 21, provided they are married or planning to wed, a policy that has shaped the nation's family and housing culture. According to Singapore's Ministry of National Development, over 60% of couples purchase their first flat by age 28. The introduction of the enhanced CPF housing grant in 2023 increased the maximum grant for young couples to 80,000 Singapore dollars, further lowering entry barriers. While property prices have surged in the private sector, government intervention keeps public housing within reach for young adults. Recent statistics show that the average age of first-time HDB buyers fell from 29.1 in 2019 to 27.7 in 2024. The city-states model is often studied worldwide for its ability to ensure housing stability and early asset building for its youth. 3. Slovakia. High youth ownership despite rising prices. Slovakia's youth homeownership rate remains among Europe's highest, with 81% of people aged 25 to 34 living in owner-occupied homes as of early 2024, according to the Slovak Statistical Office. Family ties play a crucial role, as many young people inherit or are gifted properties from relatives. The government's Young People's Mortgage program, which provides interest subsidies for buyers under 35, has helped counteract increasing property prices, especially in Bratislava, where prices rose 9% in 2023. Despite these increases, the average mortgage for young buyers is still manageable, with typical monthly payments under €400. The rental market remains underdeveloped, further pushing young adults toward ownership as the default path. New policies in 2024 have also made it easier for young buyers to access state-supported loans with lower down payments. The cultural value placed on homeownership as a symbol of stability and independence continues to drive these high rates among Slovak youth. 4. Romania. Inherited homes and state support keep young owners ahead. Romania ranks near the top globally for young homeownership, with over 91% of 25 to 34-year-olds owning their homes, according to Eurostat's 2024 report. This staggering rate is largely driven by inheritance and the tradition of passing down property within families. The government's Prima Casa, First Home program, relaunched in 2023, guarantees loans for first-time buyers under 35, with down payments as low as 5%. In rural areas, land and homes are often transferred at little or no cost to younger family members. Urbanization has led to a modest uptick in rental demand, but the vast majority of young Romanians still aspire to own. Despite inflation and a 7% rise in property prices in Bucharest last year, affordable housing remains accessible in smaller cities. Romanian banks have also reported a 15% increase in mortgage approvals for buyers under 30 since 2023, highlighting a sustained trend. 5. Hungary. Incentives for young families fuel home purchases. Hungary's push for early homeownership is closely linked to its demographic policies. The government's Family Housing Allowance Program, CSOK, expanded in 2024, offers grants of up to 10 million Hungarian forints, about €26,000, to young families buying or building a home. New mothers under 30 can also qualify for interest-free loans, making it easier for young couples to secure property soon after marriage. According to the Hungarian Central Statistical Office, 76% of people aged 25 to 34 now own their homes, with that share climbing to over 80% in rural regions. The average age of first-time buyers dropped to 27.9 in 2024, down from 29.65 years ago. Budapest's property market remains competitive, yet government-backed loans and price caps on new builds are keeping young buyers in the game. The emphasis on supporting young families through housing policy has become a central plank of Hungary's social strategy. 6. Czechia. Creative mortgages and family transfers boost youth ownership. Czechia is seeing a surge in young homeowners despite rising prices in Prague and other cities. Recent data from the Czech Statistical Office indicates 69% of people aged 25 to 34 own their home as of 2024. A big reason is the popularity of creative mortgage products tailored for young buyers, with banks offering up to 90% loan-to-value ratios and extended repayment terms. The government's Start Home initiative, introduced in 2023, provides a state guarantee for mortgages taken by buyers under 30. Family transfers remain common, especially in smaller towns where multi-generational living is the norm. In 2024, over 40,000 homes were transferred to family members under age 35. With Prague's median price for a starter flat now at 5.2 million Czech korunas, shared ownership models and co-borrowing arrangements have become more popular among young friends and siblings. Despite inflation, Czech youth continue to prioritize property over long-term renting. 7. Estonia. Digital mortgages and tech-savvy young buyers. Estonia's young homeownership rate has quietly risen in recent years, with 60% of people aged 25 to 34 now owning homes as of 2024, according to Statistics Estonia. A major driver is the country's advanced digital infrastructure. Most mortgage applications and approvals are processed entirely online, reducing friction and speeding up the process for tech-savvy young adults. The government's Cred-EX guarantee program, expanded in 2024, allows buyers under 35 to secure loans with lower down payments and flexible terms. Urban centers like Tallinn have seen property prices rise by 11% in the past year, but demand from young buyers remains strong, with over 7,000 new mortgage approvals in this age group in the first quarter of 2024 alone. Many Estonians also benefit from family support, with parents often gifting equity or co-signing loans. The trend toward early ownership is reinforced by a national preference for building personal wealth through real estate rather than renting. 8. Chile. Government subsidies and social housing open doors for millennials. Chile is a surprising contender in early homeownership, especially among its urban millennial population. According to a 2024 report from the Ministry of Housing and Urbanism, 57% of people aged 25 to 34 own their homes, thanks in large part to robust government subsidy programs. The DS-19 and DS-01 initiatives have expanded affordable housing, with grants covering up to 40% of the property value for first-time buyers under 35. Mortgage interest rates have stabilized around 4.5% in 2024, making monthly payments feasible for young professionals. Cities like Santiago and Valparaiso have seen a boom in new developments targeted at younger buyers, including micro-apartments and co-living spaces. The social housing sector, long a backbone of Chilean policy, continues to offer pathways to ownership for lower-income youth. Despite economic headwinds, Chile's youth homeownership rate has increased by 9% since 2020, marking a significant shift. 9. Turkey. Family networks and urbanization drive young ownership. In Turkey, homeownership among young adults has remained strong despite inflation and economic challenges. According to the Turkish Statistical Institute, 68% of people aged 25 to 34 owned their homes in 2024. Family networks play a central role, with many young people receiving property as a wedding gift or through inheritance. The government's First Home, First Key program, introduced in 2023, offers interest-free loans for buyers under 30, further lowering barriers to entry. Istanbul and Ankara have both seen rapid urbanization, with new housing projects specifically designed for young professionals. The average age of first-time buyers fell to 28.5 in 2024, a notable drop from previous years. Mortgage rates stabilized at around 3.8% thanks to central bank intervention, and co-ownership arrangements among siblings and cousins are increasingly common. Despite currency fluctuations, the cultural emphasis on property ownership remains unshaken among Turkish youth. 10. Latvia. Supportive policies and affordable prices attract young buyers. Latvia's housing market has quietly become a haven for young buyers, with 64% of residents aged 25 to 34 owning their homes in 2024, based on data from the Latvian Central Statistical Bureau. The government's Ultim program offers state-backed loan guarantees and down payment assistance for buyers under 35, helping to offset rising prices in Riga and other cities. Over 8,000 young Latvians accessed these programs in the past year alone. Property outside the capital remains particularly affordable, with average prices under €1,200 per square meter, making it feasible for young professionals to buy early in their careers. Banks have reported a 20% increase in mortgage applications from people under 30 since new lending rules were introduced in 2023. Family support, through both financial gifts and property transfers, also remains a key factor in high youth homeownership rates. Latvia's combination of policy support and manageable prices continues to draw young buyers into the market.